Hey guys, William Branch here, Texas Local Lender. Thank you for tuning in. Today we're going to talk about closing costs. What are they? Closing costs are in every mortgage. So whenever you're going for a home, we find it all the time. Hey, how much do you want to put down? Well, I want to put down 3, or I want to put down 5%. Well, what about the closing costs? Is there closing costs? Didn't know that. So I want to break it down to you kind of typically what you're going to find in closing costs. Mostly every lender is going to have a closing cost that they're going to have to disclose to you. Typically, once you're under contract, they are going to have to disclose those closing costs to you within 3 days. And those closing costs can't change throughout the loan on the lender's side. So if they do, they have to do what's called a change of circumstance. So anyways, let's just kind of break down first off what are closing costs. So typically, lenders are going to have a closing cost. Typically, you're going to have a funding fee, an underwriting fee, and a processing fee in most cases. An appraisal costs. You're typically looking about $600 to $700 in today's market. If you need a rush, I've seen some of those upwards of $1,000 to $1,200 to having a rush appraiser. I've heard lenders that are actually paying them because appraisers are so backed up. Can you believe that? It's crazy. So, and then on top of that, you're going to have a title policy. We need to find out who's going to pay for the title policy. The market that we have right now, the buyers are typically paying those, but the seller can also pay them. In a normal market, typically the seller will pay the title policy. And then you're going to have your funding or your recording fees. There's a typical attorney fee for the lender to draw your docs. There's an escrow fee for your closer. Those typically run anywhere from $400 to $450 on average. And then you're going to have your survey costs. And your survey costs could vary depending on the size of your lot. So if you have large acreage, that survey cost could be a lot of money. Same thing on the appraisal. If you have a really big house, that can affect the price of your appraisal. So some lenders charge what's called a discount point, and what that means is you're actually buying down the rate. On it, just to kind of give you an example, it's typically going to be 1%, and that's going to be 1% of your loan amount. So if you have a $500,000 loan, that'll be a $5,000 cost just to buy down your rate a little bit. So these are all closing costs that are factored in. Other things that could be a closing cost, you could have what's called an upfront mortgage insurance premium. And that's where, okay, you have a buyer that has great credit. They're putting 5 to 10% down, and they want to get rid of their mortgage insurance. So this is a cost that a buyer can actually pay for upfront and not have mortgage insurance at all. All loans are going to have closing costs on top of their down payments. Some loans aren't going to have any down payments, but they're still going to have closing costs. So typically, I normally like to tell people you're looking at about $10,000 to $11,000 depending on the value, the price of your home. So if you are thinking about purchasing a house, you are going to need more money than on top of your down payment towards those closing costs. Does a buyer have to pay for the closing costs? That answer would be no. They don't necessarily have to. What can happen is you can get what's called a seller concession from the seller, and that's typically going to be written in your contract. You're going to want to reach out to your lender, and depending on your loan, will determine how much closing costs can actually be paid by the seller. So if it's a 3% conventional, then you're only going to be limited to 3%. Where if it's like an FHA or VA is going to be a 4%, or FHA is going to be 6% that can be contribute to the loan, but you still have to have your down payment. So they can't cover more than what your down payment is required. Down payment assistance program is a little bit different. They can cover all your closing costs. You can actually bring $0 to the closing table. So there are ways to structure your loan, get your closing costs paid for. Make sure you talk to your lender, ask them how to put this together. They can get this taken care of for you and help you structure your loan depending on your finances. So I want to say thank you for tuning in today. I hope I answered your questions about closing costs, what they are, how they work. And if you have any questions, always reach out to us. Please like and subscribe our page, and we will see you next time. Texas Local Lender, out.